Hey everybody, hey traders, Chris Pulver here, and welcome back to another installment of my Keep It Seriously Simple video series where I'm helping traders of any ability level in any financial market trade to be more consistently profitable. Today is one of my favorite lessons. This takes me back a long ways. When I first really got serious about trading about 15 years ago, this was one of my aha moments. This is one of my big discoveries that really helped my trading and helped me pack away some nice profits and some risk capital that allowed me to make some nice money and trade for a living. And I will say that I owe a lot of my early success to pivot points. So without further ado, let's go ahead and get started. I'm going to go ahead and move myself out of the way. Let's go into the risk disclaimer. We understand there's risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose. Anything I'm talking about is for educational purposes only. All right. If you're following me out there on social media, best way to find me is on my YouTube channel, youtube.com/Chris Pulver. Most of the comments I see on videos like this, a chance to take that thumbs up button and smash it and like the video. I appreciate that. That goes a long way to help me with the YouTube algorithms to make sure that videos like this are seen by everybody. And I've also been getting a lot of great emails and videos coming in from traders and followers out there that are liking these videos and learning a lot from that. So please keep that love coming this way. And again, comments are appreciated. The thumbs up button, click the notification bell, subscribe to the channel. And if you want me to send me a message, you can reach out to me on the YouTube channel. You can direct message me on Instagram. You can follow me at pulver.chris. I also stream Mondays and Fridays for my weekly outlook and weekly recap. YouTube.com/Chris Pulver Trading. I stream it also on Facebook and Twitter. I also have some swag. I have the see it, protect it, collect it. One of my favorite sayings. I started with one-on-one instruction, working with traders around the world. There was just one individual trader. I will leave him anonymous, but we spent hours and hours and hours together, and it ended up just kind of sticking where he was making good trades. He wasn't really managing trades very well, and I just said, hey man, you got to see it, you got to protect it, and you got to collect it. And that was probably 8 years ago, and it's stuck with me ever since. And I really think it's a hallmark of my trading because we can always find new trades. We can always find great trades. But the most important thing is that we have a plan, we trade that plan, and we use good equity management, use sound trade sizes, and protect your profits, right? So it is available on Teespring. I will also put it in the comment section here. If you're interested in buying a t-shirt, buying a sweatshirt, have at it. There's both of them available, and enjoy. And if anybody does happen to buy a t-shirt, all of those proceeds are going to just support this YouTube channel. I will be buying new cameras. My next big investment is probably going to be the 55-inch touchscreen monitor and better lighting, soundproofing, stuff like that. So just more production friendly so I can bring that to all of you in this complimentary education. All right, so it is available on Teespring. I'll include the link in the comments. Let's get to today's lesson, which is about the pivot point. So first and foremost, let me define and show you what a pivot point is. The way that I've used it for many years is actually the pivot point, but it's also important you understand that this can calculate support and resistance levels as well. So to keep it really simple, which is the name of this video series, it is about the balance point of the market. So you have the, let's say we're going to calculate a daily pivot. Okay, let me move this out of here. I will include that Investopedia link. I'll go through that in just a second here. But if we have a pivot point, let me bring up my drawing tool. And if we have price from a day that goes from this low to this high, let's say this is price action for a day. So we have the low of the day, we have the high of the day, and let's say that price closes right here. Those are the three values you will need to calculate your pivot point. All right, so if we have the low plus the high plus the close, you add those together and take the average of them, that will be your next unit's pivot point. So if this is a day, the low of the day, the high of the day, the close of the day will calculate the next day's pivot. If this was a week of price action, the low of the week, the high of the week, the close of the week will calculate the next week's pivot point. And monthly price action, monthly low, monthly high, monthly close, calculates the next month's pivot. And I use this from daily to weekly to monthly to even yearly pivot points. I've talked about this a lot in my recent outlooks and my recaps. Those big yearly pivots are really important to see some massive balance in the markets, especially when the markets are overbought and oversold. And it helps me also build some positions at really nice lows and build some positions at really nice highs. And I think at the end of the year, most of the time these pivots are hit. So that is it. Low plus high plus close calculate the average, and that gives you that next unit's pivot point, whether it's a day, week, month or year. Now, let me go back to that Investopedia article for a second, because you will see that there's also some variations to that calculation if you're looking for support and resistance levels. So, and again, I'll include this in the comment section here, the description of the video. The formula for pivot point. This is the pivot calculator right there. That's the high, the low, the close. You take the average. That gets you your pivot point. If you want to calculate resistance 1, you're looking at the pivot times 2 minus the low. So the calculations, I've honestly never done these manually because I honestly don't care that much about the S1, 2, and 3 levels. It's important. I mean, I've traded before where it comes down to S3 for the day or comes up to R3 for the day, and I've looked to buy low or sell high. But at the end of the day, I'm really still focused on, for all these years, using pivot points. All right, so if you want to really explore these further calculations, you can do that. I can show you on the charts right here. If I go into the pivot indicator, check this out. So let's bring up a stock here. Let's bring up Apple. And we have, you can see on my chart, I'm on a daily chart right now, so you can see a variety of pivots. The larger orange line right here, this is my yearly pivot. So that is the previous year's low plus the high, which was right around here, plus the close. And so our low, high, close calculates the yearly pivot. Now I've done the same thing on monthly and weekly and daily. Right now, if I wanted to, let's go into a smaller time frame. Let's go to the 1 hour chart so you can see those daily pivots. All right, so we have a daily pivot here with a blue line, this light blue line that price ended up finding today's pivot. Now I can show you really quickly, if I go to my daily pivot and I go into my settings, I can also show where the bigger levels are. So this is calculating the support 1, resistance 1, levels 2, 3, 4, 5, and if I click OK, essentially this is what I think, okay? I think that for the most part, price is going to be range bound within these calculated levels. It is very, very rare that in a single day, price is going to go beyond this support 5 or above this resistance 5. Very infrequently. In fact, I rarely, if ever, see that unless there's some type of flash crash move or some anomaly. But for the most part, this rarely happens. So, this is why cost averaging is a really popular strategy. It definitely works, but it is all about trade size and equity management, right? So I don't want to get rid of the pivots. I want to just go back and get rid of my additional levels. Okay, so how do I use pivots? What is the point of doing this video? Now you can just throw on pivots and have at it, but the way that I like to see pivots, here's my best practice for using pivots, all right? I am trading to pivots as number 1, if we have overbought or oversold conditions. And I've talked about this also in previous Keep It Seriously Simple video series where I'm talking about adding to winning trades and some of the clusters and indicators I'm looking for to buy extremely low or sell extremely high. What I'd like to see is if we have oversold conditions, all right, and with those oversold conditions, we have a pivot cluster, okay? So it would look something like this. If I had price that was selling off aggressively and it was trending for quite a while, if we started to notice that there are lots of daily pivots available and even weekly pivots that are clustered together, or weeklies and monthlies that are clustered together, that to me is a nice magnetic force that the market eventually will end up gravitating back towards, okay? And that would be where I'm looking for oversold conditions and pivot clusters to allow me to buy really low and take profit back up towards those available pivots that price has not found yet, right? You can also flip this around and say, okay, well, if we have oversold conditions in pivot clusters, can we also have overbought conditions and pivot clusters? And the answer to that is yes. All right, and we actually have 3 scenarios. We have oversold conditions, we have overbought conditions, and that looks something like this. If we had price that was trending to the upside, and again, pretty aggressively, somewhat irrationally, where the market gets to these extremes, we will notice we'll have a series of daily pivots clustered together, a weekly pivot or 2 clustered together, monthly pivots clustered together. These are all good signs for price to eventually give us some type of trend line break, give us some type of topping pattern, and then start to gravitate back down in balance, right? And in all of this, all I'm really looking for, if you watch that Fibonacci video, my Fibonacci's and Gans, all of this to me is really just using balance in the market. And so if we have, I'll use a Fibonacci, if you have a low to a high and you can drag this swing, guess what? You tend to see a lot of these pivots will be clustered around this 38% Fibonacci level, perhaps right around this 50% level. Okay, this 382, 50, 618, these big clusters of pivots and pockets and inefficiencies. Because you know what? When you go from a low to a high and the market's going to find a way to balance, we're probably going to come back in and balance within these Fibonacci levels. And so as a trader, when you have the opportunity to sell nice and high, we can sell that back for profit. All right. And at the same time, once we're in, let's say that we are buying low and we have pivots back here. Well, we're buying low, we're taking it back to pivots here. Maybe it gets a little bit more extreme to the upside, but we can take this nice chunk of profit right there on the buy low side. We get to these extremes, we can take the sell highs and take profit here on the sell side. So if you're looking at pivots, and you're identifying these clusters and you have overbought or oversold conditions, you can start to align those trades to buy low and sell high. Again, I would make sure that in these type of conditions, because we will see pivots get missed, in these types of conditions, it is important to remain patient. Okay, I have over the years started going from 1 hour charts, 4 hour charts to now really only focused on daily and weekly charts when it comes to overbought and oversold conditions, because all that's doing is it's allowing those higher time frames, bigger liquidity levels to show more extremes that are very rare. It's rare to get a daily or weekly or monthly overbought or oversold condition. So the probability of being able to buy very low or sell very high when we have those extremes, the probability is extremely high. And that's what I like to trade. So if I am, essentially counter trend trading, if you will, and again, I'm not saying that I'm counter trend trading, because if I'm patiently waiting for buy levels, I might be early, I might be anticipating, but if I am even remotely right on the next big trade, my probability is pretty high that I can carve out some wins, right? And the same thing is true if it's overbought. If it's this way overbought and I'm patient, maybe I'm a little bit early, maybe I anticipate, maybe I get that trend line break, maybe I can add to my trade and build a sell trade. But probability wise, I'm going to find direction pretty soon. All right, now that is two ways that I trade pivots and pivot clusters. Now there's a third way, and this is actually one of the most profitable ways to trade pivots and be fairly aggressive and generate some really nice returns over the course of a couple of months, maybe even not that long. But I mean, weeks and weeks and weeks of steady income, profits, months of consolidation. I got a bug right there. Check this out. So here's another condition that I like to trade pivots: range and consolidation and low volatility. Okay, these conditions right here can be pristine for pivot trading. So as an example, let's say that price is using this high, using this low, and for the life of this currency pair or the life of this stock or the life of this cryptocurrency, if you want to be an active trader, there will be all sorts of ways that price responds to these highs and lows. But guess what? You have a high, low close, you have another day's pivot. You have a high, low close, you have another week's pivot. And price will find these pivots almost every single day. So let me find an example here. Let's go into some stock trading. All right, let's look at a stock. I know that Netflix is range bound. I know Amazon is range bound. Let's take a look at Amazon. Okay, recently, let's go to an 8-hour chart so we can get a little bit more real estate, but use those daily pivots. Okay, I want you to see here, since we had some tops, let me go to a 4-hour chart actually. Okay, since we had some tops forming in Amazon, how many pivots have we actually hit? So let's go day to day. How many pivots have we actually hit? So we have a pivot there that's available, a pivot there that's available, and guess what? We tag the day's pivot. Okay, we missed that one, we tag it the next day. We missed this one, we tag it a few days later. Do you notice that price came all the way back up into this pivot and nearly came back up into that pivot? And look, if you're buying this low and you're targeting these missed pivots, if you're 98% of the way there, you need to take profit. Okay, don't hold on and say, I'm not going to close my trade until that pivot is hit. It's the condition that I call good enough, right? If it's nearly to that target, take your profit. And you can see here that's a really nice inefficient candle, a nice little pocket candle, and it comes all the way back to there beautifully. But take a look at all of these pivots that are hit. So we have this pivot is missed, finds the next 2 or 3, this one is missed, ends up coming back down into this area right here. We have a pivot that's available. Again, good enough. We end up coming all the way back up to this cluster of pivots. We come all the way back down to this pivot and this pivot here. They get hit. We have a pivot here. Price finds it. We have a pivot right there. You'll see. You're just going to see that all these pivots end up getting hit. And if you look at price on Amazon right now is not really going anywhere. So it is pretty safe to trade pivots in this area. So guess what? If we are up near these highs and we have available pivots, we're probably looking to sell this if you're interested in selling Amazon. Otherwise, if price is going to go up, come back down and leave pivots available, we can buy these range lows and trade it back up into those pivots and available range highs. Okay, that is just a stock. I'll show Netflix and we'll go into some currency pairs, which are very efficient. Netflix has also been range bound since we had some highs here around 570 and some lows at 470. So I will look at this resistance here and this support here. You can see that we still have our yearly pivot from 2021 that is available, but I think that we're pretty capped to the upside. So guess what? You can sell high, you can buy low, and there are going to be a lot of pivots in here that price will end up finding. So you can see here that we have a pivot available, we fall, we rally back up to find them, and then we fall down. Okay, we missed a pivot there, but we came back to find it. We have a pivot here that price is trying to come back and find, which I wouldn't be surprised if it does. I would suspect that Netflix finds a way to revisit these highs. And if you're interested in selling Netflix, you're looking to sell it nice and high, and then this falls back down. If it falls to the downside and leaves pivots, you look to buy this nice and low. Probability-wise, we're going to get back up to those highs. Okay, so again, use the daily pivot levels. You can use the same thing for weeklies and monthlies, but when we have range conditions, it certainly helps to be able to identify, sideways movement, identify those equal highs, those equal lows, slow movement, low volatility after an expansion cycle, after a trend cycle. Big trends are either followed by more trends, but might be a balancing trend, or more trends can be followed by contractions. So an expansion cycle can be followed by a contraction cycle, or a decision cycle can be followed by an indecision cycle. And when you're in this environment, we're trying to buy low, we're trying to sell high, we're trying to take as much profit of that trend as we can. But when the trend is over and the market is calming down and it's going to some type of indecision zone or indecision cycle, we can trade fairly aggressively. And a lot of times pivot points for us can be very, very profitable. And they can also be active. That's one thing that's very cool about them as well, is we can be active traders inside those ranges. Let's talk about a couple of currency pairs. Okay, Euro Swiss. This trade took forever, but look at how many pivots were available for traders to find. So this goes back to about a 6-month, 7-month period that I was holding a bunch of Euro Swiss longs. Now take a look at this. I will give you the exact reason why I was long in the trade. You can probably see it if you're a little bit savvy with those pivots. You notice that we have a pivot right here. That is a yearly pivot from 2020. And we have a monthly pivot right there. All right. And so we have a cluster. We have a big monthly pivot. We have a big yearly pivot. And we also have previous resistance. And so when this market fell to these extremes, oversold conditions, divergence where price is making lower lows and momentum is not, I love to see this type of structure that I can buy. And so we have a break, a retest of the low, price aggressively goes to the upside, but you can see that we had to wait, right? We had to wait for more consolidation. We had this nice little trend phase, okay, or a little decision cycle, and then we had price going into a lot of corrections, indecision, but lo and behold, when it was finally ready to break and trend again, where did it trend? It trended to the upside and found this pivot cluster. All right, so that was a trade that required a lot of patience. Traders were with me for months on this trade, but we also made a ton of profit. So that's a good thing. But take a look at this zone inside of here, because you'll also see that every single pivot was effectively hit. So take a look. I mean, I don't really see a lot. I see a daily pivot right there. Well, if I draw a line over, that pivot is hit. I have one little pivot right here. If I draw a line over, that pivot is hit. We just don't see a lot of pivots. So literally every single day, if you have a pivot printing, right? If you have a pivot printing right here, and you are like, you know what, at the low of the day or near the end of the day, if it's going down, I'm going to buy it small. And the next day, if it goes down, I'm going to buy it small. And the next day it goes down, I'm going to buy it small. You can cost average in, pay attention to your structure, and boom, you get this nice move to the upside. And guess what? The pivot is hit. So when you have contraction cycles, range cycles, consolidation, pivots can be an awesome way to trade. Now, my disclaimer for anybody that starts trading pivots and starts to really appreciate the power of these pivots, understand that when you see a range, let's say that we're sideways, okay? Let's say we've been killing it. We've been killing it with pivot trading, right? Guess what? All of a sudden when this environment changes, your pivot structure is going to change as well. So when we have this thing breaking out and we go from a contraction phase or an indecision zone and we start to break out, this is when pivots are missed. Okay, this is when we have the extreme starting to form. This is when trends and breakouts are occurring. So I want to make sure that it's okay to make a lot of money in here. It's okay, trade pivots and kill it, right? Kill it. Make a ton of money in those range zones. Make a ton of money in that. And so right here, look, kill it. Make as much money as you can. And then when you start to notice that it is an obvious breakout one way or the other, don't force your trades to be like, well, Chris said cost average in and I'm going to buy it there and I'm going to hold it. Because if this is a breakout for, let's say that Tesla goes from $1,000 down to $500. Are you going to watch the stock drop 50% and you're just going to cost average into it? Well, maybe in a stock, the answer is yes, is you'll just level into it. But in Forex, I don't want to do that. I don't want to watch the market go 500 pips against me or 1,000 pips against me because this is a breakout trade. We should sell that. We should profit from that. And then wait for the extremes to set up, wait for those pivot clusters to form, and then we can buy it low. And so in the event, and this is where, kind of some trader responsibility comes into this. In the event that we're making all this money inside these ranges and it's really quiet and it's great and we love pivots so much, all of a sudden we get a breakout here. It's not worth trying to buy this and hold it, okay? If this buy trade doesn't shoot right back up into the range, you want to get out of this trade as quickly as possible and start looking for bear flags and trend line breaks to go to the downside and see how that breakout continues to go bearish. And the same thing is true here. If it breaks to the upside and you try to sell it because you're like, well, I've been faked out of these highs before, I'll sell it here. If price comes back into the range, you're in business and continue to trade the consolidation. But if price breaks and goes up again, get yourself out of this trade, look for some type of bull flag and see if price will continue to go higher. Right? So have the spatial awareness to see when the conditions are changing from a consolidation cycle into a breakout or a trend cycle. All right, that's really important because that will save you a ton of stress, all right, by sitting in trades that are clearly going against you, and you could just be a trend trader for a brief month or two and make a nice trend trade and a nice trend profit, and don't fight it. Right? But when you see that trends are ending and the market consolidates, you can trade those consolidation levels. What I'm hoping that traders get comfortable with is you see that you can buy low and take some nice profits. You can sell high and take some nice profits. You can buy low and take some nice profits. You can sell high and take some nice profits. Look, we don't have to trade every stinking level of the markets, right? If we have a level to sell or buy, and I did this backwards, if we have a level to sell or buy, then we buy low and we sell high, right? If we have a chance to go from a range cycle where we can trade ranges really nicely and then see the market's going to break out, then we should trade the breakout, right? Traders that trade trends make a ton of money in these breakouts. And what I see for a lot of range-bound traders or pivot traders sometimes is they make a lot of money in here, and then they give it all back or they start to get themselves into margin trouble because they're just stuck in a bad trade. They're selling, and then they're asking me, Chris, do you think that's going to stop going up? And my answer is probably not, because if you look at a higher time frame and look left, it's probably going up another 300 or 400 pips. It's probably going up another 10, 15, 20%. If it's a stock, it could go up indefinitely. You don't know when it's going to stop, right? So allow those conditions to set up before you try to buy, before you try to sell, and let those pivot clusters just happen, right? So it takes a little bit of spatial intelligence, pay attention to that structure, pay attention to those range cycles, those trend cycles, but it's okay. Taking a loss is probably a responsible thing for most traders, especially when it comes to trading the right environment. And that's a really important lesson to tie this all together. So do I love trading pivots? Yes. How has my pivot trading changed over the years? I went from trading really aggressively all the time, trading daily, weekly, monthly pivots, and being really, really confident that I can manage my way through these pivot trades. And then realizing that, you know what, it's fun to work myself through these trades and be profitable so I don't have to take a lot of losses. But I also don't love sitting in drawdowns for 3, 4, 5, 6 months at a time. And so what helped me become a better trader, improve my bottom line is it's okay to take a loss. It's okay when it's pretty obvious that a range is breaking out and those trends are going to be aggressive. Be a trend trader. You know, there's a time and a place to trade ranges. There's a time and a place to trade trends. When those trends are just getting started or in the meat of the trend, participate as long as you can. And when those trends are ridiculously overbought or ridiculously oversold and extreme, then you look to start aligning those buy low positions, sell high positions, and start to balance back at those pivot clusters. So it all comes full circle. All right. If you have any questions, let me know. Now is the time. Hit that thumbs up button for me. Like this video. If you have any questions or comments, I will leave the Investopedia article in the comment section. So check that out if you want to read more about pivots. It's just straight out of Investopedia. If you want to buy a little t-shirt for the CP Trading channel, Be My Guest sweatshirts, t-shirts available. And if you send me a picture, you can comment and say, hey, I bought one of your t-shirts or one of your sweatshirts. Awesome. I will tell you, I will ask you to send me an email with your picture, and I want to get this nice little CP Trading Wall of Fame going. Okay, that's it for Keep It Seriously Simple. There's another lesson for you. This, I believe, is lesson 15, and plenty more to come. So keep watching, keep hitting that thumbs up button for me, keep subscribing, and keep engaging. All right, take care, traders. Happy trading and lots of profits. Talk to you soon. Thanks, bye.